Hello, this is John Cavalli and JK Financial, and this is your August capital market, economic, and end of summer review. So wanted to get right with it. This will be a shorter post and shorter time. I want to thank you in advance for watching the video. We much appreciate it. And here we go. Thanks. Here's the actual post, and again, I found that interesting last month when I added a little bit extra into the video, so I'm going to do it again this month, and I'm going to try and smooth through this so we don't have a real long video. But what's going on this month is our financial planning tip of the month, and this came again from the field, and it was an excellent question. I haven't mentioned this in quite some time, and it's basically PMI. PMI is, I believe the acronym stands for Payers Mortgage Insurance. And what it is it's an insurance that is against a loan that happens not to be 80%. All right, long story short, what does all of that mean? Well, if the value of your home has risen and is over 80% and you have PMI insurance, there are several ways to get that removed. And they've actually put in, I did a little research on this, and they put in some laws that said if you jump over this hurdle, it has to happen. But a couple of key points. Number one, if you are paying Payers Mortgage Insurance, this PMI, then go ahead and start the process if your house is over 80% loan to value. What does that mean? That basically means that the loan value is less than 80% of the house, or the house is a greater value than 80%. This came into effect when actually the value of homes went down dramatically, and the call came in from someone on the West Coast, a good friend and client on the West Coast, and said, hey, we still have this. And of course, the values of homes have risen now. So the key thing on this, I'll let you read this on your own in the essence of time, but the key thing on this is do not get that appraisal. Don't order the appraisal and then give it to the mortgage company. It won't work. There are new laws in Dodd-Frank, sometimes called Dodd-Frankenstein, but new laws, we don't want to get this appraisal in. We don't want to order it ourselves. The mortgage company has to order it. Could cost you $400 or $500, but in most cases, that PMI insurance, it'll make it up. The loss of that or the lack of that will make it up in very dramatic time. Oh no! Moving on. Yes, interest rates. This is from Bloomberg View. This quote, but basically, what it talks about. I'm going to pull up another chart here. These interest rates are so puzzling. Okay, here we go. Here's another chart, and this is the 10-year interest rate. This is the 10-year interest rate of the U.S. Treasury. I'm going to put this chart in the blog post. It's not in there right now, but as you may recall, and I'll adjust this down a little bit so it's smaller. Rates were going to. We thought, I did, along with a lot of other professionals, at the end of the year, rates were going to go to 4, and now here they are way down at 2. The implication of this is we're not sure. The implication is the possibility lies in this chart, and this is the German 10-year Treasury, 0.89. The United States Treasury is right now 2.35. We thought it was going to 4. The possibility, and this is from Bloomberg, this is a Bloomberg chart, is that foreigners are moving capital from Germany, Italy, France, other countries to the United States and driving our interest rates down. Okay, that's one possibility. Here this is again. The other possibility, and Mohammed brings it up, is the fact that the fixed income market is signaling a slowdown. As he said, bond investors tend to be more risk averse. Not sure. I know we keep mentioning it over and over. I'm not sure what the answer is. It's a little bit concerning because the Fed over here, the FOMC, has actually been drawing down their balance sheet, and so the Fed was artificially pushing rates low down in here, and now they're no longer helping us, and rates continue to go slow. Could signal a recession. It could signal a slowdown coming. It could signal just that foreigners are buying our assets. Now, that's not supposed to work. That's beyond the scope of this discussion, but you're not supposed to just be able to buy assets from another country. There's something called interest rate parity. I'll leave it at that for now. And I wanted to say, this is a guy that I admired. I know this is a little bit from the heart, but gosh, and you've probably heard about the Robin Williams scenario, and this is a little bit off topic, but he was one of my favorites as a kid, and I just wanted to let everybody know, that if they see somebody in their life that has depression or they know somebody, alert people, because clearly there could have been a better end result than what happened to Mr. Williams. So on that positive note, well, I did want to say one other thing, and that is that while summer is gone, football season and the coolness is right around the corner. So thank you for your time. Enjoy, and look forward to talking to you next month, but not too quickly. These months are going by really fast. Take care.